Yesterday, the Fed assured traders that it would not raise interest rates until the end of 2023, despite the rapid recovery of the economy. This statement came as a surprise. So the US dollar went down this morning. The Aussie took advantage of the greenback's weakness, ending higher. The yen is still flat, waiting for a reaction from investors. The US dollar index dropped after the statement of the Fed chairman. He confirmed that the regulator would not raise the key rate for the next 2 years. Following Jerome Powell's remarks, the US currency fell to the lowest level of this month. The Fed is expecting an acceleration in economic growth and consumer prices this year as the coronavirus crisis eases. Such news is certainly bullish for the forex market. However, the US dollar declined anyway, pushing its index quotes lower. In the coming days, investors are going to monitor the dynamics of US bond yields. The 10-year US Treasury yield is holding at the level of 1.6710, heading for a more than a one-year high. Analysts believe that the US dollar is likely to recover amid the robust growth of US Treasuries. At the same time, the yen did not change the trajectory after the sharp weakening of the US dollar due to the Fed's optimistic economic forecasts. The yen is consolidating in the same trading range, waiting a more valid market reaction. The stock indexes continued to grow. It means that the situation is quite favorable for the dollar-yen pair. It may advance to the target of 110.35. So it's recommended to go long if the pair breaks above the yesterday's high of 109.34. The Australian dollar was about to dip further in anticipation of a gloomy forecast from the Fed. However, things turned out to be different. The regulator gave quite an optimistic outlook for the economy, and investors flocked to the stock market. They also shifted attention to the US dollar's main rivals. Besides, the Aussie was supported by macroeconomic news. Australia unveiled its employment change results. The reading was more than twice as high as the forecasts. Nevertheless, in the medium term, the situation may change for many currencies when traders thoroughly study the result of the meeting. Traders are likely to factor in the Fed's meeting results at the beginning of the next week. The AUDUSD pair reached the high locked on March 2nd and 3rd. It may resume the downward movement from this level, yet it's better to wait for the market's reaction. At the moment, it's not recommended to open long positions, especially until the pair goes below 0.7777. If so, it's likely to decline to the target level of 0.7615. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.